Hey, what's going on, you guys? Today, I'm making a video about something that might trigger some people, might make some people upset. My goal is not to rage bait or trigger people. It's more to bring a word of caution when it comes to the stock market these days. And it's not to make definitive predictions, obviously, because nobody knows the future definitively, but it's to look at the landscape that we are currently in and to kind of look at it through objective eyes. Uh, so, just to explain, given my background, as you guys know, I work in cybersecurity. My whole career has evolved around technology. I've been invested in technology most of my investing career. And I love technology. I don't think it's going anywhere. And that includes artificial intelligence. I think this is a tool that will never disappear, kind of like the internet. So it's not to be, doom and gloom in terms of, everything that we know and use today is going to, collapse in on itself and it's going to be Armageddon and society's over. But it's more looking from a financial standpoint of the current stock market and where we're at, and just kind of coming to terms with, we are in a bubble. I feel confident in saying that definitively. Again, if you talked to me like a year and a half ago, I wouldn't have been on that train. But over the course of the past year and a half, and as more information has come out, more information's gotten leaked. Uh, I've become more certain that the financial market right now, the stock market in particular, is a big bubble when it comes to technology and artificial intelligence. Um, you know, it's widely known now that there has been leaked financial information regarding companies like OpenAI and Anthropic, showing that they are not profitable. Hence, why they haven't gone IPO or public yet. They want a higher valuation than what they'd be given if they IPO'd, and that's because, yeah, they're not profitable. Currently, what's going on in the AI market right now is AI seems very cheap to run, and hence why companies are trying to move to AI to automate jobs. But essentially, what companies like Anthropic, OpenAI, Google with Gemini, Microsoft with Copilot, essentially what they're doing right now is they are deliberately repressing the price of running AI models in order to take up market share as fast as possible, because that's the whole AI race. Is they're all racing to become the final solution when it comes to AI. They're all racing to become the next Google search engine, essentially. And the best way to do that is artificially lower your price to capture market share and to get the most users as possible, which then would feed your AI more data, which would then improve it faster exponentially, because AI is simply very advanced, pattern matching is all AI really is at its fundamental core. So these companies are trying to do that as fast as possible, and they're basically taking on the debt. They're taking on the loss, and they're just kind of eating it so that they can get as many users as possible. And I know recently Anthropic, I want to say probably in the last several months, Anthropic has complained and talked about how Google's Gemini has taken up the most market share, and it makes sense. I mean, you make a Google search and you're using Gemini. Most users use Gemini. It's probably the last AI model where you can get a lot of usage out of it for free. Where, like, if you look at something like Twitter or X and Grok, developed by X and Elon Musk, I mean, their free tier just like doesn't even work anymore. They've kind of thrown in the towel. You have to pay to use it at all, and it's just not the same quality as someone like Anthropic or Gemini or OpenAI's ChatGPT. So yeah, that's what's currently going on right now when it comes to the AI companies. And so I think, when this bubble pops, the AI specific companies, like if Anthropic or OpenAI ever go public, I mean, their stock is going to take the biggest hit. And even privately, I mean, they might legitimately collapse because of this. Because at the end of the day, I really only see, someone's going to win that race when it comes to AI development. And I think, once again, Google's probably in the best position to win it. They have so much of their own data centers and infrastructure already built out, from Google Cloud and everything like that. So Google is just already established, where Anthropic and OpenAI, they're trying to, build out their own data centers. They're paying companies like Google and Microsoft for compute power and things like that. So those are the most, those companies themselves are the most scary when it comes to if I was investing money in them. When it comes to the semiconductor market, that's a separate market. I don't see the semiconductor market going to zero or collapsing, obviously. Semiconductors are very valuable. They're very important. They'll continue to go up in kind of, national security importance going forward, I believe. And that's why I think there's a push, obviously, for us to manufacture more here in the United States, because it's kind of crazy that so much has to be involved in Taiwan, right on China's border, and any day they might invade. So I definitely understand that position of moving manufacturing here to the United States. But as I've been forced to come to terms with, along with a lot of other people, semiconductors are becoming a commodity like oil. They go up and down in value. And, recently semiconductors, due to the development of AI and a quick surge in memory demand and CPU, GPU demand and processing power, semiconductors have skyrocketed in value due to this, hence creating a shortage, skyrocketing the price of said semiconductors. Then with that value going up, also shooting the values of the stocks of the companies that produce those semiconductors. But, we're seeing recently as well that companies are starting to catch up with demand in terms of producing these chips. And companies like, Broadcom have come out and projected, stating that they don't see this level of demand continuing indefinitely. And I mean, that's kind of obvious. You're not going to see this insane shortage of memory and this high demand for it like indefinitely. It's not going to be that. I'm not saying you're not going to get future times like this. I'm not saying that, these stocks are going to zero and you're not going to need semiconductors ever again. Of course not. You're obviously going to need them. But the point is if you thought, a semiconductor and memory shortage was going to continue forever and keeping these prices skyrocketing and keeping these stocks skyrocketing, you're out of your mind. It's not going to happen. So, and you're starting to see that now. And companies like Broadcom have had to admit that, say like, hey, we still see good demand, in the future, no doubt. Our company's still probably going to do well, but we're not going to see this exponential, insane growth in demand. And so that's why recently in the stock market, you've kind of been seeing tech pull back because of those, skepticisms. So, but, as of right now, tech is still very high. It could definitely go higher because, again, the stock market runs mainly off of sentiment. And, despite, if these numbers are kind of showing, but people still believe in, the product and in demand, even if it's not there, they can obviously keep investing their money and drive the stock price even higher. So again, I'm not predicting that it's going to drop 70% tomorrow, but I do believe, kind of like the .com bubble, all these companies are taking on extra debt, especially AI companies, but even semiconductor companies, taking on extra debt to take up market share, and they're doing it faster that they can handle. And they're trying to build out all these data centers and things faster than what they financially can handle. And I think they will see repercussions from that, kind of like, the railroads, and especially the .com bubble. In the .com bubble, we built out so much internet infrastructure with fiber lines and everything like that. And essentially the world just didn't adopt it quick enough to become profitable. And that's what I believe you're going to see again. You're going to see, because of the AI hype, these companies, whether semiconductors or these AI companies, they're going to develop out all these data centers too quick. There's not going to be as enough demand to make them profitable quick enough. And that's why you'll see the pullback. So I think you're starting to kind of see that now. Again, could go higher. I'm not here to make a prediction that it's going to crash tomorrow. And again, at least when it comes to semiconductors, I always will see value in that, compute processing power. Again, I work in the field. I'm very optimistic when it comes to technology long term. But me personally, especially when it comes to AI specific companies, I'm very concerned, so that's why, if you've watched any of my previous videos, a year ago, I decided to transition out of things like the NASDAQ and technology, and I started to invest more in undervalued, more cash flow stable companies. And and that's gone pretty well for me. And if there is some kind of massive pullback, yeah, everything's going to feel it, no doubt. I'm not saying that my stocks aren't going to go down in a time like that. But I think it's a difference between, like, are you going to lose 10 to 20%? Or are you going to lose like 50, 60, 70%, some insane amount like that. So anyways, that's all I had for you guys. Those are my thoughts on the current stock market landscape. Again, leave comments down below what you guys think. If you're very pro, the tech boom, and you think, this isn't close to over, let me know. I'd be curious to hear your thoughts. But yeah, anyways, guys, have a good one.